Good morning. Thank God it's Friday. Welcome to today's episode of Morning Wealth. Three things that we are going to talk about: Treasury yields steepen, Walmart joins Microsoft for TikTok, and dollar holds ground. S&P 500 booked a new record, and Dow Jones briefly turned positive for the year on Thursday as investors digested US Federal Reserve's new strategy to adopt a flexible form of average inflation targeting and boost employment. On the macro side, the number of Americans filing for unemployment benefits totaled 1.006 million last week, while the second quarter GDP was revised to negative 31.7 from negative 32.5, still marking the largest quarterly plunge ever. The Dow Jones climbed about 0.6%. The S&P was up 0.2%. In contrast, Nasdaq lost about 0.3%. Jerome Powell unveiled a major shift in monetary policy to allow inflation and employment to run higher, abandoning decades of precedent and ensuring that rates will stay low for years to come. The Fed will seek inflation that averages 2% over time, implying that price pressures can overshoot after periods of weakness. It also adjusts its view of full employment, reflecting our appreciation for the benefits of strong labor market, particularly for many in the low and moderate income communities, is what the chairman said in the virtual Jackson Hole speech. The Treasury yield curve steepened to the widest in 2 months on Powell's remarks as longer maturities sold off sharply, with 10-year yields jumping by about 5 basis points to 0.74. The gap has widened to about 118 basis points, accelerating a trend that's pushed the spread from as low as 94 basis points last month. Short-term bond yields fell earlier in the day, a development that is good for banks, which generally borrow short-term and lend long-term. So a curve steepening is generally good for financials, and the S&P 500 financial sector rose about 1.7%, the best of the index 11 sectors. JP Morgan was up 3.3% and Bank of America was up 1.9%. Among individual stocks, Walmart was up 4.5% and Microsoft also gained 2.5%. These moves come after Walmart said it discussed joining Microsoft in a bid for the Chinese-owned social media app TikTok's US operations. Meanwhile, TikTok's chief executive Kevin Mayer resigned from the company, citing the political environment as the Trump administration tries to force a sale. Shares of Abbott surged 7.9% after FDA cleared its 15-minute virus test. President Trump plans to buy about 150 million of the tests in a 750 million deal. The news sent competitors spiraling, wiping out at least 22 billion in market value across more than a dozen companies. Abbott will start shipping the tests within 2 weeks and plans to manufacture 50 million kits a month by October. The US dollar held its ground even after the lower for much longer speech by Powell. A couple of reasons why. The Fed announcement was largely priced in. So although the dollar shot lower when Powell made his first announcement, it U-turned shortly thereafter. One of the primary arguments for this reversal was that it was widely expected. When it became clear that there were no more surprises in the speech, investors returned to taking profits on high beta currencies. The second reason is dollar rallies as investors return to US assets. The promise for cheap money and ample liquidity are also drawing investors to US assets and in turn the US dollar. It's really hard not to be attracted by these record-breaking moves that we are seeing in the US stocks. And the Fed's new policy will help to rev the economy and allow it to run hotter. The dollar also has strong relation with treasury yields, and with the yields going up, the 10-year yields going up, it also makes the dollar more attractive, and hence we could see a little bit of that reversal. Also, if I can say, there was a tinge of optimism from Powell as well. We've been looking for cautious comments from the chair. Instead, his comments were slightly more upbeat. The Fed chair described the economy as healthy apart from the virus hit areas. US data also was better with the second quarter GDP slightly revised higher. Pending home sales has been beating expectations for quite some time now. Jobless claims also resumed its decline, though it's still above the 1 million mark. It came down from the last week's reading. Personal income and personal spending numbers are scheduled for release today. Personal income and personal spending numbers are scheduled for release today. So that's something that we'll be watching out for later today. That's your update. Stay safe and healthy, everyone. Have a lovely weekend, and I'll speak to you on Monday. Thank you.